Friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to the daily stock market analysis show, where we look at what happened in the market today and look forward how we can plan for a better trade for the next day. And this analysis is for September 30th, Friday 2022, tomorrow. Yes, flat expiry, and tomorrow we have a RBI monetary policy event outcome that's going to come, and the market is losing for the moment. Let's look at the charts. Daily charts of Nifty is what you see here. It's a bearish wide range candle, but a flat close, which means that it tried to move up and then fell down, right? Bank Nifty also bearish candle for sure, and more or less flat expiry. Okay. So it's 0.24 and less than 0.3 is what the moves that has happened, right? Very much flat. Market is trying to move up, but there is selling pressure. Let's look at the lower time frame to see what happened. Right? So this is what happened. It gapped up, giving hope for the bulls. Right? It's 1% gap up, and then it was trending down. But towards the end of the expiry, monthly expiry September, it was forming a range bound movement into 300 points in the Bank Nifty. Same with Nifty also. Gapped up nearly 1%. Bank Nifty is 1.5%. Bank Nifty it fall 2% actually after the 1% up move. Nifty it fall 0.5% after the 1% up move, and after 130 it was kind of range bound. Most choppiness came in at that time, going up, down, up. So we should moves overall is there. Gap up created one inverted V and another half V. Right, so one V for sure every day. So volatility continues above the 22, 21 kind of levels. That's what happened. Let's just summarize it. So September 30th, the last day of September, Friday, tomorrow, weekend, RBI event. Flat expiring, gap up and then selling pressure, downtrend moves, and then by the end of expiry, consolidation. Double top pattern is seen. We have seen that the last several days. What is double top and pattern and all that? Lost the moving average supports. Right? Weekly trend line is getting formed bearish. Confirmation of the previous week's candle. Just quickly show that once again. Right, so the third week of down move, clear downtrend without any doubt. Right. Bollinger Bands also we will see. Consolidation on the weekly. We are talking about daily. Clear expansion on the downside, bearishness. That's Bank Nifty. Nifty also clear expansion on the downside, bearishness. Levels to watch is same, no change because it was flattish day today. 17.161. Resistance upside, 17,300 nearby levels. Resistance gap on the upside. Downside 16,650 to 750. That range has got a gap as well as the previous low. That's a support. Nifty 16,360 gap support after that. Bank Nifty similarly 39,413 upside gap resistance, and then 39,715 resistance previous swing high. Downside 37,350 the support previous swing low, and then 36,808 the gap support down. And that's for the Bank Nifty that we're talking. Bollinger Bands movement indicate bearishness. Momentum is bearish on daily time frames below RSI 60 and it's falling on both indices. Trend is in the bear zones close to what happened earlier. Both Nifty and Bank Nifty is bearish. And it's rising strength. That means bearishness is increasing. VIX has cooled off slightly 3.5% today. At the end of the day, that consolidation was there. 21.3 still is high. Extreme cautious, especially options for derivative traders. Futures data may not be relevant because it was an expiry day, and new trading will actively happen for the next week and next month from tomorrow early. So this data may not be relevant, but anyway, short build up is what happened today both indices. Futures, options. The range is showing weird range 15,000 to 17,000 on the Nifty and 36,000, 41,000 levels. These levels may not be applicable because for October 6th weekly expiry that's going to get started actively traded from next week, as I said before. 0.78 and 0.61 is what the piece here as of now, which is not bearish but not bullish either. Sectoral watch, if you see the IT underperformed today. IT was performing the other day. Auto was kind of flat, and rest all performed actually 0.5 to 1.3 kinds of performance are there in rest of all the sectors. All the sectors are actually in the bearish momentum except pharma and FMCG, which is still maintaining that sideways. We're talking about short-term momentum. Heavyweights, if you see all of them, most of them underperformed. All the banks, ICICI, Kotak Bank, HDFC Bank, and TCS also underperformed. So underperformance was in the negative 0.5 to 1.2 kind of percentage negative, and all the other heavyweights were kind of flat close. So also we can see that all the heavyweights now in the bear zones. None of the heavyweights, or the stocks, whatever we call it, the heavyweights of the Nifty 50, none of them are in the sideways momentum in the short term. All are in the bearish. So something to be worried about. Shows the intensity of the bearish. That's coming in slowly as the momentum and the trend, everything crosses over to the negative zones. FI data is not coming, but definitely some selling has happened definitely from the Fyers. Yes, just come in 29th. It is nearly 3,600 crores of selling and 3,100 crores of buying from the DIA, which held the market from not falling. So DIAs have been buying consistently since last many days, right? 3,000 buying, 2,500 buying, 3,500. So DIAs are buying consecutively all the last 6 days when heavy selling is happening from the FI side. So that's the only reason. So how long they'll do this? Never know. That's what is holding. So DIAs are buying means it's a retail money that is coming in. So mutual fund money that is playing in, right? So that the retail money is still falling despite the foreign institutions taking away the money is what we see. Alright, but institutions selling off is a worry. Continues to be a worry. Crude is at lower, less than 82 kind of levels, but it's rising up after crashing down and taking support, and momentum is bearish regardless, which is only a relief that we have got less crude price. Dollar is shooting up in the crazy level. Yesterday it went 114 plus levels, and now it is 113. Slight dip has happened, but yeah, flattish move and multi-year high in the dollar index is what is happening. Was that the USD INR also is 82 kind of levels, all-time weak levels of the rupee. Real concern. In addition to the price patterns, momentum, futures high, all these parameters. So in addition to that, dollar shooting up and is a tough. Gold is falling. It has crashed and it is weak and falling down. So the bearish momentum short term. SGX is red as of now. US India is also red as of now. But you'll have to see all this pre-market. US India was showing some green the other day after the big fall. It is 600 point move, because of which our market would try to gap up and stay strong, but it didn't happen. So some consolidation or that get bounced, so something is happening. The breach of that major support zone, another next support zone is not done with that. So if it goes below this 29,600 kind of levels, then we have deep trouble. So something to watch out for, whether if we're going down here or consolidating here or trying to reverse and go to the upside. So this is something we have to watch out for. But yeah, so a hammer pattern could indicate a reversal or end of a downtrend. The possibility is there, but that green moment is what you see in all the indices. Nasdaq, Dow Jones, S&P 500 all shows some green yesterday. Our market did not react too much well, probably because of the monthly expiry. But yeah, it's breached in bearish momentum is there, the US indices. It's a big concern. In addition to the dollar shooting up in the fire selling, right? Major event is tomorrow is the RBI policy that's coming out, so market is going to be jittery. Stay out of the trade. Two stock picks, Tech Mahindra can give short opportunities. Voltas also can give short opportunities. So we'll just quickly see why. Voltas is having a box pattern which is breaking down and could give as much of the height of that box on the downside. Short swing trades opportunities can come in. Momentum and the trend both are in bearish zones. Techcom is all the tech companies are showing similar patterns. Tech Mahindra is an IT stock and it is showing a head and shoulder on the weekly. So this could give good short opportunity on the downside. Breaks, momentum is bearish and trend is also bearish. So targets could be as much as the height, but at least 1:2 reward if you're getting, you can go for that. There's a support near 965 and 943. So that means of small short swing trades are for sure. Means if things don't reverse in the Nifty all of a sudden, right? As long as that is not there, ICT is going to probably correct much more. Now just to wrap up for tomorrow's market view, its bearish view continues as per the chart what they say. So now it is kind of 10% in bank, 7% more of correction that has happened from the swing high. Right, after giving the false impression that it's going to break out of the trend resistance trend line and all that, nothing happened. Market is reversed, and now is that reversal going to go further extend to 15,000 levels, or is it going to end here and then further move up? That is the only doubt. Most likely it may be falling further down is what all the chart patterns are indicating. So today it was basically a flat expiry. Right, and a gap up, an attempt to move up happened, but selling pressure came in and it's falling back. So it shows the intensity of the selling in the market, and it's very high volatile as several days. And today also was despite just trending down, but in the end of the day it was volatile. Already cooled a little bit, but yeah, fix is high. Price patterns, momentum trend, PCR, VIX, FIs, selling, and all this is giving an indication that it's bearish, nothing else. You just have to go with that. The US market has been, as we have seen, it has been bearish in the momentum and has reached a major support zone. And if they breach from here, we have to closely watch that. But overall, there is heavy bearishness out there following the Fed event. Rupee is at the lowest level of weakest level of 82, and VIX is at a high level about 20, 22 kind of 21, 22 kind of level. So you have to be extremely cautious. Possible to stay out of options trading and derivative trading. Right? That's the best trade to do. Right? Always have your hedge positions overnight, because you never know what happens overnight. Right? The uncertainties in the market is reflected in the VIX, and you have to respect that. If you try to jump in and then get a tactical trade unnecessarily, we may end up losing your capital. Without hedging, you may wipe out your capital as well. So tomorrow is an expiry day, RBI policy. Market sentiments are going to jump and up and down, and maybe it will be very difficult to trade, and expiry day, profit booking, and all this can happen. So that's maybe a bearish view for the next day as well. But market did some consolidation sideways move today, right? After a major correction of nearly 7% from the top. That's what happened. So that's my view. If that helps you to frame your view when your trade plan for the next day, consider hitting the like button and share it to maximum. Right? We have very few subscriptions. If you're not subscribed, subscribe right away. Thanks for watching. Happy trading, happy learning. Bye bye.